What's up, everyone? It's Scotty with Money Vesting. So I figured I'd just go live at 5 in the morning. I think it's like 5:30 in the morning right now in New York. But just give me a thumbs up if you guys can see me and hear me. Steve and Ranjit, welcome on board. It's probably gonna be just us right now talking. I don't expect anybody else to join. But I just wanted to go live, talk to you guys about the markets, calculate some fair values on certain stocks, talk about what's really moving, do some analysis, kind of spend a few hours with you guys, and definitely kind of look at the markets, what's moving, what's not moving, and why are we seeing a bit of a pullback. However, we are starting to see some buyers step in right now. So, I mean, Nasdaq futures are not looking that bad. I mean, QQQ is obviously getting bought up here. We're down about 1% right now. The SPY is also down. But yeah, we are definitely getting a little bit bought up here. So the dip within the dip within the dip. Yeah, that's what it kind of feels like, right? So obviously it's just been a very, very consistent sell-off overall for the markets, in 2022, especially in January and February. I remember in the beginning of February, Tom Lee from Fundstrat came out and said that this was going to be a violent rally in February, and February has been anything but a rally. It's just seen lower highs and lower lows. So Jesus says, thanks for going live. Yeah, absolutely, of course. Here for you guys, and if you have any questions, just let me know. I need my puts to hit. Why are we mooning? So I need my puts to hit. So yeah, if you have got puts on the markets, then definitely you're doing good. Markets are definitely gapping down. Especially, let's just take a quick look on the Dow here. So the Dow Jones down about 0.5%. Not bad, not bad. We're starting to see a little bit of recovery here. SPY only down 62 basis points. It was much worse, right? It was obviously much, much worse for the markets when we immediately gapped down. And look at that. We bounced off of that 334 support. In fact, this right here is the chart that we really need to watch, that we also pointed out in my other video. We came dead down to 334. That was a low for today, 334.12, before getting bought up and pushing back higher. So we're back up to 337 right now, down about 1.1%. So we'll pay close attention to this. We'll keep a close eye. I don't have a presentation for you guys right now, but I just wanted to come live and kind of analyze some stocks with you and see what's actually moving right now in the market. So obviously, when you take a look at pre-market, what's up the most, we've got energy companies, right? So Occidental, this energy company, LNG, is up over 8% to 125. Then we got another energy company up over 4.4%, Devon Energy. So all energy companies are up at the top of the list. When you look at which companies are pushing higher, right? Suncor Energy, Schlumberger, we got Dow Chemicals, we got Valero Energy, we've got petroleum, we got ExxonMobil, Chevron is up. So all energy stocks pushing higher, and because of how much oil prices have gone up. So, we were almost testing $100 a barrel. I also mentioned it in our Discord, but $99.40, that was the high for the day today that we got tested at. And right now we're slightly seeing a bit of a pullback right now for Brent. And crude is just under $95 per barrel right now, still getting tagged at that resistance. Volatility, 30 is where we are. So are you going to be live before market opens? Yes, Steve. So I'm thinking about maybe doing this for about an hour, maybe a couple hours, looking at the markets, and then I'll take a break and then I'll come back live once again. 30 minutes, 45 minutes before the market opens, we'll do like a regular market open live stream as well. So again, I just wanted to kind of do this because I know there's a lot of uncertainty, there's a lot of fear in the markets, a lot of stocks are pulling back. So just wanted to kind of come on board and see how the markets are trading, and possibly even calculate some fair values for certain stocks, kind of go over their earnings reports, and kind of do some research with you guys. It's not going to be so much about looking at the markets, but instead just like doing some research and doing some analyses on companies. But we'll do our regular market update, pre-market sort of live stream. So yeah, and volatility coming down a little bit. So we're just over 30. We were much higher at over 32. Yeah, keeping us alive by coming live. That's true. And red candle. So the Nasdaq's definitely getting bought up here. Now we're down less than 1%. So maybe we should stay alive here for as long as we can, because we are seeing buyers kind of step in here for the markets. So that's that. Volatility, energy obviously pushing higher. That's all your energy stocks. They're up the most pre-market. Yeah, Exxon's up over 2.3%. We got Chevron that is up over 1.79%. Schlumberger is also up over 3% right now. Suncor Energy up over 3%. So a lot of these companies are higher. And then you look at anything else, right? So Realty Income, that's ticker symbol O, down about 23 basis points. Barclays is pulling back. Bristol Myers pulling back. Everything else is red, right? So we got Home Depot, we get Gilead Sciences, Kroger, JP Morgan, Avail, AbbVie, Alphabet, 3M. Which stocks are down the most? If you come all the way down to the list and see for the ones that are down the most. So by the way, these we still need to see the trade actually go off for them. But pre-market, American Waterworks down the most at over 4%. We got Alibaba pulling back. Alibaba is down over 4.2%, trading at $113, $114 per share. So Golden, what does that beep? So yeah, that was the power that went out. So it just came back on. So hopefully it's not going to be beeping again. Coinbase down close to 4% because Bitcoin prices obviously have broken down certain levels. So if you come back over here, Bitcoin right now just trying to recover back higher, back over 37,000, but this inverse head and shoulders is no longer valid anymore. So support now to watch is going to be at 37,000, 37,300, kind of aligned with this sort of green horizontal line for us to watch. So that's why Coinbase is down. Marathon is down quite a bit. I think it's down over 10% last time I checked. Square, so Block is pulling back over 3.18%. We got Neo down over 3% as well. And then a lot of companies, pretty much every single stock except for energy companies is down right now. So this is going to be the heat map, and you'll notice that energy minerals are the only ones pre-market that are green, whereas even semiconductors, I think Nvidia right now is down quite a bit. So if you come over to here, Nvidia is down a little bit over 2.2%, roughly under 2% here in the red right now. So, all right, so what we're going to do, all right, so 342, 343, QQQ watching resistance here. Let's take a quick look. It is starting to fill that gap very nicely. I mean, there's definitely buyers stepping in. And this was the overall chart or the pattern, so to speak, that we've shared with everyone in that sort of like technical analysis piece where we are consistently making lower highs. So if you come over to the 4-hour chart, you'll notice the lower highs that the NASDAQ is forming, the QQQs right here, lower highs, lower highs, lower highs. So first order of business is obviously for us to break out these certain resistances, certain highs, in order for us to regain control and possibly change that trend to higher highs and higher lows instead of the lower highs and lower lows that we've seen for the NASDAQ. And as we talked about and discussed in our sort of get ready for this week video, this is the decisive week. From a technical standpoint, this is going to be a lot of decisions, and this is going to be a battleground for the bulls and the bears. If 334 holds up, then it seems like it is right now pre-market. Buyers also stepped in. Right, we were exactly at this price on January 24th, and the buyers stepped in. So that's going to be this level right here. Buyers stepped in, and we saw a rally back higher, back up to 370s. Right, so looks like the buyers once again are stepping in here so far at 334. So that's going to be this battleground for the bulls and the bears. If you break down, then that's going to be a little bit of a technical weakness, and I wouldn't be surprised for us to see some more sort of sell-offs in the market. But if the buyers continue to step up, and if we're able to take out these resistance levels, so first one is going to be 356 is what I'm watching, Ranjit, right here, because that's going to be in line with this previous support as well. So that's the level that I'm really watching on the QQQs today. Are we able to break past 355 on the QQQs? So yeah, kind of looks like a double bottom for sure. With these lower highs, you can make a case for a descending triangle as well, because we're making these lower highs consistently for the QQQs, and we're getting supported at the bottom below 334. It really depends which either bulls or bears kind of overshadow the markets, right? Which pressure is going to break out first, and this is about as clear as it gets right now. So yeah, that's and definitely right now, structurally speaking, the bears are in control because we have been making lower highs since the end of last year, since the beginning of this year, since January and December of 21, January of 22, we have consistently seen lower highs. So what do you guys think? Are we going to see a breakout above 357 or a breakdown below 334? So let me know in the live chat what you guys think. Are we going to see a breakout past 357 or a breakdown below 334? Just let me know in the live chat. So yeah, we've got about 156 people. So there's still people that are up there, already up, not asleep right now. That's good to know. All right, I'm gonna close this. So Jug Group says below, probably gonna see a breakdown below. Then Toast Islam says it will break out. We'll go over some individual stocks here in just a minute. Gully, I'll take a Jim. I'll take a look at AMD. I'll take a look at Nvidia as well. So above 357, we got a couple. So it's kind of like 50-50. It's definitely a 50-50. Like I'm seeing breakdown and I'm also seeing a breakouts. So it's kind of, it can go either way. I definitely agree. I mean, there's bears do have the momentum right now, but you know, markets also don't stay down here for very long. I mean, if you take a look at from all-time highs for the Nasdaq, it is down a little bit over 17%, which is actually a pretty big sell-off in the Nasdaq, right? 17%, 18% is usually seen as kind of like a bear market. Anything over 20% is seen as a bear market. Anything over 35, 40, 50% is seen as a crash for the markets, but bear market will be over 20% in my opinion. So we are pretty down from all-time highs, but again, it all comes down to, you know, which direction we break out to. And right now, momentum, bears have the momentum, but fundamentally, like valuation-wise, there's a lot of companies that are now starting to trade at reasonable levels. So we'll see what happens. So Jim says breakdown, Gene says breakdown. So, and then a few people says I want a bloody red so I can scoop up some stocks. That's great. All right, so we'll kind of circle back to this. I'll create some alerts, and you know that's going to keep us updated as to where we actually end up moving, in which direction do the bulls actually have what it takes to push us higher, or if the bears are going to do everything in their power to break us down below 334. So we'll circle back to this, and I'll keep some alerts on check. SPY's almost positive. This is insanity. Like, look at the volatility coming in from lows of 428. It's pushed up over 1.35% pre-market alone. So we definitely do have the buyers stepping in. All right, so let's talk about some individual companies now. Nvidia also getting bought up. It was, I think, roughly down 3% when I first looked at it when pre-market opened. Right now it's down about 1.76. Advanced Micro Devices is down just about 1%. So I'm trading at $112, $113 per share. So yeah, Steve says, if in doubt, zoom out. Definitely, I agree. I mean, if you look at the overall trend for the markets, it has been nothing but a consistent higher highs and higher lows, and it has been pushing higher very, very nicely. So QQQ's starting to break over 339. So that's good. We've got an alert set up, and we will be alerted every time the Nasdaq is breaking, you know, to the upside or to the downside. So AMD close to 1%. How is Tesla doing? Tesla was down to 830s last time I checked. So getting bought up here, down still about 1%, so just under $850. So let's take a look at InMode, Victor. So InMode is down about 1.42%, trading at $41, roughly $41. The support level right now to watch for the company is going to be right here, close to $40, $40.50. But I wouldn't be surprised if it does come out to $31, right? We sold our cash secured put and then we closed it. So in other words, we bought to close, or in other words, closed it for a profit. And now I only have a certain amount of shares and I have plans of dollar cost averaging down for this company. If it does break down below 40, if it does come down to $31, $35 per share, I would love to kind of DC it into this company as well. So just waiting and just watching whether we see a breakdown below $40. Earnings were great. And obviously it's been selling off because of a lower guide that the company provided right now. So let's see. So Victor says cash could put in the money right now. I need to decide if assign or rollover. So when does the option expire? Does it expire today? Actually, no, it can't expire today. So does it expire? When does it expire? Does it expire anytime soon, or do you have? Because you know, $40.50. Yeah, so I will roll over until 40. Yeah, I think that's a good way to do it, because then you can also, you know, kind of roll it over and collect some more premium and have a lower cost basis if you need to. So I think that's a smart thing to do. So can you discuss commodities? So March 18th. All right, so you've got time, but I think if you're already in the money, it is okay for you to roll it over. and then that way kind of reduce or minimize your loss, and obviously collect more premium and lower your cost basis. But yeah, $31, $35 if it does come down, I would love to kind of DCA into those prices, and wouldn't mind kind of selling another cash secured put on in mode in the future. So, all right, let's see. SPY recovering. Yes, so SPY is definitely recovering. We should probably stay alive because the markets are starting to recover here very, very nicely. 334, QQ got a nice bounce back higher. And SPY is also getting a nice bounce back off of $429 per share levels. Steve, why do you think Kathy dumped Palantir? That was, that was very sort of strange in my view that, Kathy obviously dumped Palantir. And as I mentioned before, like some of her timings of these trades have been very, very strange. They've been very weird. I mean, like no investor in their right mind would do something like this. I mean, it's just not rational, right? Where you load up on Palantir at like 25 and $20 and $30 or wherever she was buying at, and then all of a sudden on earnings when they drop 10%, 12%, you end up selling at the lowest possible price. I mean, I'm not saying that it can't go lower, it can certainly go lower, but I mean, I'm just curious to learn about what's the motivation behind that selling pressure. There could be a couple different reasons. Number one, she's trying to consolidate her portfolio into some of her highest conviction stocks, which are her Teslas and Rokus and Teladocs, some of those companies that she truly believes over the long term are higher conviction names. She's trying to consolidate, and since you don't have so much inflows coming in, right? So you don't have a lot of money coming in as clients are pulling out of her funds. You need more money to kind of dollar cost average in those companies. That's number one. Number two is she probably sees something that materially changed her view on Palantir for the next 5 years or 7 years, right? They usually have a time horizon of 5 years out. But yeah, that was very surprising. I mean, as far as I researched the report, there was a couple red flags that I pointed out in my video. But other than that, I think the growth was strong, right? We all knew government was going to get capped out at some point. Commercial was the real growth engine for the company. As more and more clients, more and more businesses start to realize what Palantir can do. And as the business improve, my goal is to, yes, get my allocation higher and higher as I build my confidence into the company. Right now it's at 1%. But they're doing well. I mean, I didn't find the business kind of like going into this big stagnation or the growth rates didn't kind of slow down or anything. But yeah, very, very curious. I have no idea why she ended up selling all of her position in Palantir. The only couple reasons I pointed out, number one is that she's trying to consolidate her portfolio into a few of her higher conviction picks, or she just thought that, the earnings weren't that great, which I do kind of disagree with. So, all right. Let's see. I'm just trying to get over to these live chat here. So Robinson, you still buying Palantir? So I did buy a little bit after the earnings drop. But again, my allocation is at 1%. So it's a very, very small allocation right now. And as I start to feel more confident and comfortable with the company and what they're doing, then I will slowly and steadily kind of dollar cost average more into that stock. So I do believe they've got a lot of potential, no doubt, right? So Palantir, as I've mentioned before, the main thesis is around data and making sense of that data. Companies need to be more efficient using that data. And I don't have an engineering background, so I don't know how the software works, but from the net retention, what we've seen, clients renewing their contracts, the feedback seems to be very, very positive for the product that they're offering. So yes, I do think the business model is there. It's just the numbers. It's the numbers that need to get better for the company, right? And trading at 18 times sales, 17 times sales is definitely high, but for a software company, you can find those multiples in the markets, right? Microsoft not too long ago was trading at 14, 16 times sales. So, those are multiples that can be seen in the markets. And as a Palantir kind of scales their business, we got a reiteration of the 30+% growth year over year. I think that's good. But while all those things are good, still keeping my allocation very, very low because the dilution is very high and there are some other concerns that I have around the company. Let's see. So what's your thoughts on Roku and Netflix? So HP, I've done analysis on both companies. In fact, Roku, I did analysis literally a couple days ago. So over the long weekend. So you're more than welcome to check out that video and why it obviously dropped over 22%. and kind of like the whole valuation analysis and what the price targets look like for the company. So make sure that you do check out that video. And Netflix also, I did a video on about 2 weeks ago, 2 or 3 weeks ago. All right, so let's just see. Let's just do some analysis on some companies. All right, so I really want to spend some time here doing some research on companies here. So this, by the way, is a spreadsheet that we've been building with our Discord members, our Patreon members. We've been doing some private live streams to kind of figure out the intrinsic value for some stocks. And again, I will make this a spreadsheet available to download for all of our members. And on top of that, we're going to continue to kind of add more ticker symbols, add more stocks to the list, which will help us kind of identify some fair values, some intrinsic value for these companies. Because, in times like these, in times when the markets are selling off so much, and it has nothing to do with the company's underlying business and the fundamentals, because most stocks you'll notice are selling off regardless of what the fundamentals are doing. Sure, you can make a case of some are trading at higher multiples, so they deserve to come down and there has to be a multiple compression, yes. But at the same time, if the business continues to perform well, it's important for us to kind of create our watch list, create our shopping list, find out that fair value, find out that intrinsic value, and kind of look at dollar cost averaging at those levels. If not, you can also figure out some options plays at those strike prices, at those fair value prices. So let's see. So Roku and Netflix we covered. Thoughts on CPTN? I don't know what that stock is. So Septon. All right, so Septon, by the way, I was actually looking at this hot list, which TradingView obviously has this feature where you can kind of go over stocks that dropped or gained the most in one single day. And I was looking at Roku and DraftKings, right? They were obviously on the list down over 20+%. And then I caught my attention. Septon was one of them, down over 57%. So I definitely clicked on it and saw that this stock gained over 300+% yesterday. Actually, not yesterday, the day before on Thursday. And then obviously it's down over 57%, pretty much got cut in half the following day, the following Friday. So absolutely incredible momentum. I have no idea what the company does right now. So definitely would need to do a lot more research. I can't really go over anything at the moment. So, very, very strong momentum to the upside. I think it got triggered with some hauls on the way up. So you'll notice these gaps here, significant gaps on February 17th. And those are your trading hauls because it kind of breached that level, that percentage move in one single day. So very, very strong pullback. But right now it's just hard for me to go over this right now because we don't have any fundamentals or technicals for this. So yeah, Russian markets definitely pulled back. So if you come over to the Russian index, which is going to be RG, no, not that one. Forgot what the name was. Is it RTSI? Is it this one? Is this the one that covers? Yeah, I think this is it, right? Yeah, so this was down over 2.66% and down over 13% on that day. From all-time highs, it's down close to 40%. Yeah, so you're right. 40% pullback for this index. Very, very strong move to the downside. And, obviously we're getting updates by the minute on what's going on in Ukraine and how they're actually moving in some of the eastern parts of the country. So that's what's really moving the markets right now. But now we've got, SPY almost positive, QQQ down only 0.5%, and the Dow Jones down about 18 basis points, with the yields, the 10-year yields, pushing back higher over 1.92, but this number was down to 1.9. Actually 1.847, so you can see the low for the day here. It was down to 1.847, and that simply means that investors are moving towards bonds, right? Again, we've talked about the risk-averse nature of the market, and during times of volatility, during times of this geopolitical tension and wars, you will find investors go away from Bitcoin, from cryptos, from stocks, from riskier assets over to safer ones, which includes your bonds, 10-year treasuries, and even defensive stocks for that matter. And that's why when the prices go higher, because more and more people want to move towards bonds, prices go higher for bond prices and yields come down because of the inverse relationship. And right now we're starting to see a little bit, pre-market, we're starting to see a little bit move back into stocks as QQQ kind of recovers nicely from 334s. All right, so let's take a look at Mercado Libre, so MELI. Let's see how that stock is doing right now. Okay, so we had a long support at close to $950. So this support, has validated in the past. Right now, we're starting to break it down under that support here. It had a perfect double top resistance in back in September of 21, and even further back in February of 21, and that's a level coming in at 1985, right? So $1,985. We have just been getting rejected at that level twice before finally starting to pull back on the stock. So let's take a look at the numbers. So revenue growth, that's one of the things that we look at from an income statement standpoint. So from 2014, about $500 million to well over $4 billion, right? 3.9, almost $4 billion. So very, very strong growth rate for the company. If you really think about it, that's almost 8x growth for the company in the last 7 years, 8 years. Now, when you come to profitability, the company is still not profitable yet. In fact, we were profitable back in 2014, 15, 16, 17, and recently it has actually turned net losses of roughly $700,000. But on a quarter-over-quarter basis, the past 2 quarters, the company was profitable. $1.86 billion and net income was $95 million. The margins are low. Again, it's an e-commerce company, so margins are not very, very good. From a balance sheet standpoint, cash to debt is a little bit down here. So cash is at under 2.5 billion, with debt sitting at over 3.13 billion. So that definitely needs to see some more improvement. Cash, total assets sitting at over 6.8, liability 6.68. And then the shares outstanding, let's take a look at it annually. Not a lot of share dilution. This is actually good. They've only gone from about 44 million to over 49, roughly under 50 million shares outstanding. With PE ratio 641, right? That's because the company A is not profitable yet. Even if they are, they're very, very small margins. That is one of the issues with Square as well, right? So Square Block we covered earlier, and sales are growing very nicely, and as a result, the price of sales is 8 times, but the margins are so low, and as a result, PE is only 641, and price of free cash flow 112, with enterprise value to EBITDA at over 85. Return on assets, return on equity, and invested capital very, very low at 3%, 4%. Current ratio is good at over 1.23. So overall, I think the balance sheet is in a fair, okay shape. Little to no dilution. A very strong sales growth, but the multiples are very high because the company's margins are so low. In fact, they do have earnings coming up today, February 22nd. So that should be interesting for the company, down close to 2% right now. So that's that. That's kind of like my 2 cents. 945 starting to break down here. And the next support, technical support, would be at roughly 750, 753 levels. Kind of in line with this previous resistance, and that's going to be that support level. So the markets are not open right now. We're just doing a little bit of it earlier session, just going over some stocks, just researching and going over the markets and what's moving and what's not. But let's see. So, okay. What happened to the futures? So futures are turning a little bit more positive here. SPY is down still about 22 basis points, but we did see a lot of buyers kind of step in after 5 a.m., 5:30 a.m. Eastern. And right now futures, especially for the NASDAQ futures, we're only down close to 40 basis points. This has been a huge recovery. I mean, at one point we were down close to 3%. So definitely lots of buyers stepped in, and S&P futures are now positive, with Dow Jones futures down only 8 basis points. So that's that. So Mercado Libre went over. Yes, we covered the Russian news, and that's what was moving the markets lower. So I want to increase my Google, Microsoft, Facebook this week. They're extremely oversold in 1-year time frame. This is usually a bottom. Can you verify this in the technicals? So let's take a look at Google first. So Google right now has been moving sideways, right? There's been a lot of consolidation right now for Google. There has been some negative divergence that we pointed out. So it was making some higher highs and some lower highs. Then we did become oversold when it came down to 2,500, and then quickly reversed on that stock split news, rallied over 21%. So I wouldn't necessarily call Google right now as being oversold. It has mostly been consolidating sideways. I would say the valuation is fair, right? Fair meaning it's not overvalued, it's not undervalued. You're not getting it at cheap here if you're buying. It's fair market value right now. But of course, the markets can be anything but fair. So if there's a more significant sell-off, if large caps for any reason start to get even more hit, especially the ones that haven't really come down, like Apple, Microsoft, and Google, or even Amazon for that matter, then there could be some potential downside, and you are better off, in my opinion, just kind of waiting this out and just seeing how this all plays out over the next few weeks, especially up until like March FOMC meeting and what that interest rate hike is going to be and how the market kind of reacts to that news. So next support I'm really watching for Google is 24.99, 2500. That has been the support where we bounced off of on January 24th. But right now, just mostly consolidating. I don't think the Google is right now oversold for that matter, and the valuation is fair. But it can certainly come even to lower prices, possibly below 2,500 to give you that better deal for this company. I think the same can be said for Microsoft. In fact, it's also making kind of like a head and shoulders pattern. I think Ranjit can kind of confirm that for us in the chat. But this, a left shoulder, a head, and a right shoulder, possibly with a neckline at 280. So if Microsoft comes down, tests this support, and there's a higher likelihood that we see a break below this neckline of $280 if, of course, the markets are also very, very weak. So if the NASDAQ sells off further, wouldn't be surprised one bit to see Microsoft under $280 and a possible breakdown below this. So, that's kind of like my 2 cents. Again, not oversold yet. RSI is at 40, roughly 37. So pretty much neutral at this point in time right now. So we'll keep a close eye on this. And then Facebook, yes, Facebook, I can say confidently that it's very oversold. RSI is trading at under 25 right now. Even on a weekly chart, you'll notice where the RSI is. I mean, it's at 20. It's at 20 right now. So yeah, definitely very, very oversold for Facebook. And it's obviously down a little bit over 1.25%. In fact, Facebook opened at 190. So if you go over to the 5-minute chart, the first trade went at 190, and right now we're back over $200. But yeah, this is going to be that next sort of higher low to really watch on Meta. It's going to be this level right here that we validated coming in from like April of 2014. That was also the March 2020 crash level. And it's crazy to think that Facebook is now trading at below its pre-pandemic levels. Pre-pandemic, it was trading at roughly 225, and now we're at 206, 203, right? A lot of stocks just went like literally they went like this during the pandemic, and after the pandemic they're back down to these levels, right? So absolutely no change. And what's crazy is that's what the stock price did. This is what the stock price did. But the business fundamentals did this. Business fundamentals for the actual companies went up, and they're still going up, right? They're still going higher. But stock price literally just came back down just because we're seeing that slower growth in the company's business or the underlying revenue and earnings and whatnot. So that's that. And let's see. So, all right, FUBO, let's take a quick look. FUBO. So starting to break down now under 840 as well. This was a previous support that it was validating roughly at around 840, 835. And right now down another 2.6%. They do have earnings coming up, if I'm not mistaken. Yeah, so they do have earnings coming up this week, actually. So that should be interesting for the company and what type of guidance they provide us. But yeah, right now for FUBO, the most important thing is getting their operating expenses and actual expenses in general, cost of selling and SG&A marketing expenses back down, because it's over 100% of their actual revenue. So that has been the biggest issue for the company, is getting more towards profitability in the future. So earnings are going to be super important. Right now, starting to break down below 840 here. So technically, there may be a support here at close to 675, but of course, we don't have a lot of volume back here. So most of the volume started trading back in September of 2020. So that's when we actually saw some more potential upside here. All right, so that's that. And yeah, let me see how many people are in this live stream. So just over 200. That's good. I mean, I didn't expect anybody to be up this early. It's still like 6 a.m. over there. All right, so let's take a look at, so when's the floor? Nobody knows. I can't tell you that because I don't know. Nobody knows when the market's going to bottom out and where the floor is. But yeah, what I can tell you is that technically bears are in full control. We've got a support at 334 for the NASDAQ. And let's take a look at the SPY. Because SPY also had a support from January 24th, which we obviously have not come down to yet. So that's a support coming in at 420, right? $420. That's going to be, yep, this level at 420. If you go down a little bit further here, 420.75 is going to be that support for the SPY. Nicholas, yes, there will be another stream in Market Open. I just wanted to go live here a little bit earlier because I was just researching some stocks anyway. So I figured, the markets are down a little bit. Let me just go hang out with the community and see what everybody's talking about and take a look at the markets as well. My key phrase during videos is that is that. Do I say that a lot? That is that. I think it's more like moving forward. I think that's the word that I use the most. So, okay, Anonymous is from Singapore. That's good. Venko, what are you doing at this time? Just researching, not really much. Again, I wanted to keep this stream a little bit more casual than me like going over certain things and just kind of look at stocks and look at the yields and look at different things and not really stress over a lot of different things. Caddies are night watch. Winter is coming. Is that what you're saying, Ranjit? Winter is coming here in spring. I think we're just getting out of the winter, but you're saying winter's coming. That means it's about to get real bad in the markets. The weekend was good. It was good. It was long. Obviously, I didn't want the markets to be closed on Monday, but what can you do? But yeah, it's all right. So not bad. All right, thoughts on Nvidia. I think I did a couple videos on Nvidia as well. It kind of feels like it's also forming some type of a head and shoulders pattern. So, like a left shoulder here, a head all the way up till $345, and then a right shoulder. So we'll see. We'll see if we actually do see any type of a breakdown, but we've also got a lot of support, a lot of demand for Nvidia at lower levels. So we've got a support here. That's the ascending support. That's the higher low over here as well. And this is going to be that possible neckline sitting all the way down to 220s, 215 levels for Nvidia. So what I'm really waiting for Nvidia is to come down, build sub 200, possibly under 185, under 190, 185 levels, and would love to kind of start to DCA into it. It's a very high growth stock, so high multiple name. So that's why I don't want to go too crazy, but if it does come down sub 190, sub 185, then I would love to kind of start a position there. Brandon says you high as no, not, of course not. What are you talking about? Let's take a look at Tesla. So TSLA. Tesla, 843 right now, so just down about 1.63%. So 850 is going to be that support. So we barely closed above that level on Friday. So mostly consolidation sideways, but mostly lower highs and lower lows. Right. So there's a lot of weakness for Tesla stock as well as we continue to kind of see those patterns play out. Right. So it's definitely making this downtrending channel of lower highs and lower lows, and the next stop point is going to be 785. What are you guys talking about? I'm literally over here drinking green tea. You guys are so funny. But yeah, this is gonna be the lower highs and lower lows for Tesla. Support at close to 785, like I said, 775, $780. Oh my god, you guys are so funny. You guys are really making me laugh right now. So cryptos. Big breakdown here. Obviously, we didn't see any news out of crypto for that matter. It could have just been, the war related. So the green tea is pretty green. I'm drinking it out of a green cup too. So I don't know if you guys can see it, but it is a green cup. Especially got this cup. Yeah. I also have a red cup, but I don't like to use that at all for obvious reasons. All right, so All right, what stocks? Oil at 99. So look at that. So oil at $98 right now. Man, I mean, gas prices definitely going higher. So much, right? Obviously, California has seen $4, $5 per gallon. Um, Even over here, since we converted in liters, it is roughly $4 or $5 per liter. Oh, actually per gallon over here when you convert that into liter as well. Um, so yeah, that's that. And then, oh, I said it again. I just noticed that. Ranjit, you are right. But Brent, almost. What do you guys think? Are we gonna hit 100? 100 is like a given at this point. I think we're obviously gonna see $100 a barrel. Um, but are we gonna see $116 a barrel? That's the real question? Or is that possible for oil? Because I do have an analysis over here on energy as well. So let's just go over that very quickly. So let's see. In the Middle East, 80 cents per liter, the highest it's ever been. That's crazy because 80 cents a liter is actually lower. Is it? Yeah, so let me just do the math here very quickly. So yeah, so that's actually low. That's much cheaper than what we're paying over here. We're paying like $1.25 per liter here, and over there you're saying it's about 80 cents per liter, which is actually not as expensive, obviously, as here in India, and nowhere near close to what it is in the US. But yeah, this is gonna be the actual chart for WTI crude, and obviously we've seen levels. So let's just go over the monthly chart. We've seen levels all the way till highs of about 113, $114. This was back in 2011, 2012, 2013. And oil's rally here has obviously been very, very significant. 170% gain for oil prices. So how many of you guys actually think that we're going to see $113, $114 once again? That's going to be like a 10-year high for oil. Almost like an 11-year high. And for Brent, that's going to be sitting roughly at about $126 a barrel. So energy right now, this is our chart that we looked at. If you look at the year to date, energy is up another 2.65%, right? So as we covered over here, all energy companies are moving higher, pretty much all of them, and the yields have started to come back down a little bit. So yields are down over 5% from their recent highs, but energy still the big leader. I mean, there's a big divergence here. I mean, the two lines you see it going top of the screen, that's your energy line. Everything else is under 5% gain for the day. Everything else, literally, I mean, this encompasses your growth stocks, your staple stocks, your utility stocks, your discretionary stocks, your communication services. This even encompasses Bitcoin, Ethereum. What else can we possibly put on this line to look at what's actually moving right now? Two things that have gone up: energy and yields. If you've got any other sectors, any other things that you want me to include here, I'm happy to. But it mostly does include all of the S&P 500 funds, right? ETFs. So yep, Zenith says $5 a gallon in California. So XLF is going to be on this as well. They're flat. XLF is only down about 78 basis points. Perhaps we should also add the SPY and QQQs here as well. So SPY is down 9.1%, QQQ is down almost 15% year to date. So we also added those. Jugger says, what should we add? My blood pressure? Oh my god. You guys are hilarious. I love it. So, yeah, we can probably add some commodities too. Do I have gold here? I probably do have gold. Yep, so I have gold and silver. So gold is up 5%, silver is up 4.4%. So that's up there. Biotech Small caps destroyed, definitely. So biotech is going to be XBI all the way down here, down 22.5%. By the way, I would definitely get access to this chart. I mean, this is literally shows you the entire market in one chart, right? Where's the money flowing from and where's the money flowing to? This chart will show you that. Year to date, all you have to look at which sectors are performing. And right now, only sector is up is energy. All the other sectors are lagging behind. Gold and silver commodities slightly up, but everything else, even financials, staples are flat. SPY, QQQ is also included. Cryptos are included, but this really gives you a lot of detail on the market. I just want to add a few more. What are we missing here? Should we add oil too? Let's just add oil prices. So I'll add this. Yep. So I'll add U.S. oil, which is up 21%. So in line with energy. So oil prices up, energy sector is up, and then we'll add iron. So let's see iron. So let me just go to the commodities here. And I do have palladium. I've got platinum, got copper prices, lumber prices. But what is going to be that iron ticker symbol? All right, so iron ore, we'll just add these futures. We'll just keep them on the watch list for now here. All right, so let's take a look at the relative charts too. We'll quickly go over the relative charts. Yeah, these markets are keeping me up at night. That's true. How long has it been since we've been live streaming? About almost an hour. That's not long. All right, so relative charts, I do have them somewhere here. I think we can also look at over here, because I did some analysis on the QQQs versus the SPY. Let's see. Yep, so this is going to be the relative chart for the markets. And, very, very nice consistent uptrend. This is the QQQ's relative performance versus the SPY. And we are starting to break here down again. But it's not like the first time. We have breached this level before. So it really is going to be this support at close to 0.78. So, we were at this exact same level on May 10th. And on May 10th, this is 2021. So 2021, this is where the NASDAQ was. So if you look at it from a relative standpoint for QQQs, this is where we were from a relative standpoint on May 10th, right at the same level as where we are right now. And on May 10th, the markets were right here. Right, this was the NASDAQ. And obviously, as we recovered for this relative chart, as this thing started to outperform the SPY, and it rallied over 11%, we saw the NASDAQ in itself rallied over 28%. So that was the move to the upside. And right now, what we're really seeing is obviously this thing come back down to its same levels from back in May. But the price obviously has moved up much higher, so we're nowhere near close to where we were back in May of 21. So it'll be interesting, if this relative performance chart continues to come down, that means there's a lot of weakness in tech stocks. Obviously, growth stocks have been selling off, but that's also the time to be looking into this sector, like looking into this sort of area of the market where nobody is actually buying anything, right? You're seeing more selling pressure in tech than you're seeing buying pressure, obviously. So, and then once this reverses, you get the opportunity to kind of ride that wave, ride the momentum back higher. Because that's exactly what happened after May 21. We saw a perfect move back to the upside. So keeping a close eye at this relative performance chart. So Coinbase, I think from a fundamental standpoint, I think it's very low valuation. But this thing obviously is moving with Bitcoin. When Bitcoin drops, as it has done from all-time highs, selling pressure literally started on November 9th, 2 days after, who knew, 2 days after I turned 25, that the markets were going to absolutely get destroyed. This has been the trend. So if you come to QQQs as well, and by the way, Coinbase also, on November 9th, it started falling. QQQs, if it was November 9th, when it actually started falling, it'll be crazy. So November 22nd. So we didn't peak out until November 22nd. But yeah, that's when the market's really started to pull back. And from those levels, it's down close to 17%. So. All right, so what I want to do now, let's just build on our spreadsheet. So I know this is kind of like reserved for our Patreon Discord members only. So what we're gonna do is we're gonna open up another spreadsheet, and I'll call this YouTube stocks, stocks that we can do some analysis on from a fundamental standpoint. So again, the format is gonna be the same. I'm gonna put the ticker symbol. And then I'm gonna have the fair value price, intrinsic value, margin of safety, discount rate, all that stuff. So we'll put the fair value, and I'll put the EPS and the EPS 5-year growth rate that we're taking for the company. And yeah, so margin of safety, discount rate's already gonna be built in. So we'll try to do that for these companies. So again, which companies you guys want me to go over? And they have to be profitable because we're using EPS formulas, so they have to be profitable companies. So that is important. If you're going to be doing, like, if you're going to be asking me a stock, then it has to be profitable company. So Alibaba reports their numbers on February 25th, right? So $2.53. That's actually the estimate. So we have to wait, I think, for the Q4 numbers to come out, because I think they are reporting for Q4, and then kind of look at the overall EPS to understand what the future, because I mean, Alibaba is undervalued. We don't have to do the analysis to understand that Alibaba is undervalued. It's just the fair value calculator, right? Where's the intrinsic value? That we can definitely do after the earnings come out. But let's take a look at Tesla's earnings here. Tesla, by the way, for everybody who's holding like I am as well, for everybody who's bullish, don't be surprised if Tesla's earnings, intrinsic value or fair value comes to be very, very low, because that's the whole point of trying to understand the fair value, the intrinsic value, is because that means the market is obviously pricing the stock much, much higher. So in the short term, sure, there can be a lot of weakness. There can be some momentum to the downside, but the fair value is already pricing in a lot of margin of safety and a discount rate of 12%, which is market beating. So right now I'm trying to look for the EPS, which they reported for 2021. So we're just gonna go to Seeking Alpha, and we're gonna go to Tesla. Look at the financials for 2021, and we're trying to find the EPS for the company. We're gonna plug it in over here, by the way. So Tesla. So 2021 EPS, diluted EPS is all the way down to 490. So that's the number that we want. 490 is what we're gonna use over here, $4.90. So, and then we need a growth rate for the company, right? So growth, obviously they've told us 50% growth for the next 5 years, or for next several years out. And Seeking Alpha has 48%, right? 49% growth for the next 3 to 5 years. So let's just go with the company's estimate of 50%, right? 50%, and we also need to assign it a multiple, right? Multiple meaning, what times earnings do you see Tesla trading at 5 years from now? Obviously, multiples have been very high. On a forward basis, 81, trailing basis 174, 5-year average has been 157. And I want to ask you guys, what multiple do you think Tesla is going to demand 5 years from now if they're growing at 50%, as they have mentioned for several years out? They're going to be growing deliveries, revenues, earnings by 50%. What type of multiple do you think Tesla is going to demand from the market? That's the tough question, because nobody knows what the multiples market's going to give it, right? So I want to ask you guys, what type of multiples? So Sahil says 150. 45 I think is much more reasonable than 150, definitely. Jagru says 200. So those are very, very high multiples. Obviously, yes, the growth rate is strong, but even those multiples are very high, right? So we always have to be on the conservative side. Let's put it this way: if you can be conservative and get a very, very reasonable fair value, anything on top of that, right? Anything the company does better or higher growth or better margins in the future, that's going to be icing on the cake. Like literally you're not accounting for the best case scenario, and the best case scenario happens. Our job, especially my job as looking at companies, is to look at it from a very, very pessimistic and conservative standpoint, paint the worst case scenario picture, and even on a worst case basis of stock is undervalued, that's a freaking buy for me, right? That's going to be a buying opportunity, because then that leaves us with a lot of room for profit, with very little to no room for risk, and a great margin of safety. So, all right, so I've got 45, got 150, 200, 100, less than 100, 65, 65, 35, 35, got 16. Okay, so I'm gonna go with something reasonable, and I'll put down like 40. All right, 40p multiple is what, let's just see where that puts us. So fair value comes in at $760 and a price target of 1488, excuse me, 1488. So $1,480 for Tesla 5 years from now, 2026. I think that's very reasonable. I think we can all agree that it's a very reasonable assumption here that Tesla's fair value is at 760 and price target of $1,488. And right now, based on today's prices, Tesla might be trading at around fair value, maybe a little bit overvalued, right? Overvalued meaning it's trading at $845. Now, look what happens when you change your assumptions. Let's just say Tesla is not able to grow by 50%. Let's just say that it grows by, half that, EPS wise. Because remember, some years will be higher, some years will be lower. So it's not going to all be 50% or higher for Tesla. So let's just say that they grow by 25%, right? Look what happens, right? The price immediately drops down by 50%. Fair value then comes down to $305, and price target then becomes $600. So that means there has to be a big, big haircut for Tesla to come down to those levels. Every single stock is worth, how much the growth rate is going to be. The growth rate and its PE multiples. And that's how we look at every single company, right? Because it has to be a present value. You have to pay something today for all the future cash flows and the earnings you're going to get in the future. So the growth rates and the multiples matter most. So again, 25% conservative and P multiple. If you're even more conservative at 25, then you get $190 fair value, right? That's where a lot of bears come out and short sellers come out. You say, Tesla's fair value is $190 or like $100. It's not worth more than Ford, or it's not worth more than GM or whatnot. And this, is based on very traditional metrics and looking at the numbers that way. But of course, if you believe that Tesla's can do 50% and demand like even a 30 times multiple, then $570, $600, that's where I'm comfortable buying Tesla, to be honest. I mean, if it comes down to, $600, sub 600, that's where I would love to kind of get more shares of Tesla at those prices. So just for fun, can you try 150 PE? All right, so let's just do 150. What do you guys think the price is going to be here? Any guesses? Where Tesla is going to be at 150 price to earnings with a 50% growth rate? So staying at these levels, staying at this PE multiple, and growing at the same rate as they have been growing for the next 5 years. These are some Cathy Wood numbers right here about to happen. 3K, 1,200, 5K. All right, let's hit enter. So we got a price target of $5,581, and a lot of you guys weren't far off. Fair value at $2,850. So that's the fair value for the stock, in 2021, at the end of 2021, basically when we're analyzing this. So, but yeah, obviously that's not realistic. So we got to keep that to a reasonable 30, 25, 30. I would definitely go more conservative than being more aggressive, because being conservative gives you a lot of margin of safety, right? Being aggressive, you're wrong on one thing, and absolutely things, fall out of place. So that's that. So we're gonna keep with this sort of number, 50 times growth rate, and the price earnings 30. So we get $4.90 in EPS. So Tesla fair value comes in at, let's see, 570. That's what I'm going to keep right now for the sake of our analysis. 570.07. EPS was 490. We're taking a growth rate of 50%, and we're taking a multiple of 30. So that's the analysis on Tesla. Any next stock? So next ticker symbol here. What stock are we going to analyze next? But again, has to be a profitable company, which we can sort of already have the 2021 numbers for. In other words, the EPS, the profitability already we have, and then we can look at it. So Nvidia is a good one. I think we have done some analysis on Nvidia already. But Nvidia we can quickly take a look at because they already reported their numbers. So, all right, where is Seeking Alpha? Let's see. All right, so Nvidia's next. Then we'll take a look at Shopify. I think I did already. But then PayPal we've already done. Microsoft we can do. So Microsoft and Palantir will do. But Palantir, again, on a GAAP basis, is not profitable. So, and even if it is, Palantir's margins are so low that you're probably going to get like a few bucks as like the fair value for the company. But anyway, so they already report for 2022. By the way, I can open up Nvidia's analysis here. All right, so that's Nvidia's spreadsheet. So let's see. So we got an earnings of $3.85. That was the EPS. So $3.85. That was a number. And let's just brainstorm some growth rates for the company. Where do you think Nvidia's EPS is going to grow by for the next 5 years? For the next 5 years, Nvidia's growth rate for EPS. What do you guys think? Seeking Alpha has Nvidia's growth rate at 24%. I think that's reasonable. 24, 25% is very reasonable for the company. Steven has it at 80% for Nvidia. We're talking 5 years out, not just the year next, but 5 years out, right? So it's incredibly difficult for companies to grow this on a consistent basis, right? So for next 5 years, Yahoo Finance has 34%. Seeking Alpha has just under 25%. So Sahil has 30 to 35%. I think 25% would be reasonable for the company. I might be even a little bit higher at 25% just because I want to be more conservative, but I think 25% is reasonable estimate. Nicholas says 20%. Come on, guys, we've got over 200 people on the call here on basically this live stream. I'm sure everybody's aware of Nvidia, what the company does, and I know everyone's got at least some estimate as to how much Nvidia is going to grow by its earnings for the next 5 years. We need more data. We need more stuff that we can kind of bounce off of each other's ideas, right? So let me know in the live chat. We've only got 4 people so far telling me how much Nvidia's EPS is going to grow by for the next 5 years. All right, so now we're getting some numbers, 30%, 20%. Seeking Alpha is 25, Yahoo Finance is 35. Because it all depends on the growth rate and the multiple, right? So those are the two things that we're estimating for the company. All right, so we got 21.66. That's a very, very specific. I like it. Praveen says 20. Jeff says 20. 25.69. So let's just go with 25. Or I'm getting a lot of 20s and 25s. Let's just go with 22.5. All right, I think that's a reasonable number that they can grow earnings by, 22.5%. Now we get to the multiple. So what type of multiples is Nvidia going to demand 5 years from now? Right now they're trading at obviously very rich multiples, 42 times earnings. And then we've got 61. We've got 53 on a forward basis. So on a 5-year basis, on an average, 41 has been the level. 41 on a forward basis, and then 48 on a trailing basis for the company. So what do you guys think the multiple is going to be? I know where the multiple could be, possibly in the future, but I want to hear from you guys. So Sal says 20. I like that. I was thinking 20 as well. I think 20 is very reasonable for the company. Let's see what happens with 20 multiples. Again, we want to be conservative, right? So if conservative side, the fair value is going to be at $108 per share, right? Based on the EPS of $3.85, growing it at 22.5%, 20 times multiple, we get a price target of $212 and a fair value of $108. If we get to 25% growth and we do a 25 times multiple, we get a fair value of $150 per share. So that's going to be that. And a price target of rough just under $300 per share. So yeah, based on 25% growth and a 25 PE multiple, $150 is a fair price. and obviously Nvidia is trading at $230. That's why I'm like much more interested. I'll start to be more interested sub 200, sub 185, around those levels. But let's try 30 PE, $180. 20 PE is going to be $120, and 235 price target. And again, this is already accounting for a margin of safety of 10%. So, you know, if you go with 30 PE and you go with a 0% margin of safety, right? So you're literally going to be buying it at fair value, then the fair value becomes $200, right? That becomes a fair value. That's based on a 25% growth rate and a PE multiple of 30 times. But if you assign a 10% growth rate, then you get $180 fair value for the stock based on these multiples. But I think 25 is for me, 25 sort of PE multiple based on 25% growth rate is going to give us $150 fair value, including a margin of safety. So that's what we're going to put down on the sheet, you know, just as a reference point. Again, obviously these numbers are not like fixed in or set in stone because a lot of things do change for companies, but we're going to put down $150. And the EPS was 385. We took growth rates of 25% with a multiple of 25. So that's that. Let's take a look at next. Let's see. By the way, let's take a look at how the markets are doing right now. So QQQ is down about 90 basis points. We got the SPY down 44. And the Dow Jones also down about 0.5% here. So Facebook we already did. Facebook we've already done in the past, like several times, couple times. And we also did it with the community as well on the private live stream. So I think I also did like a video on Facebook as well that was trading at around its fair value. So Salesforce, I think Salesforce is a good one for us to do. I've never really checked Salesforce's numbers. So let's just do that. And I think Salesforce already did announce their earnings, if I'm not mistaken, or they do announce it on March 1st. So, all right, let's see if we can get some numbers. Salesforce earnings, we'll go over here. So third quarter fiscal year 2022 numbers. So we need to kind of update that sheet to 2022. And we'll come over here down to EPS, earnings per share. So diluted income per share for 9 months ended 2021 was $1.53, and they earned 47 cents in Q3, and they're going to be reporting $1.53 here, and they're expected to announce 75 cents. So we can just do some simple math. So 75 cents plus $1.53, that's going to give us $2.28 for the entire year, fiscal year 2022. So $2.28 is what we have for the earnings per share, for the overall EPS for the company. Now let's just come back over here to look at the growth rate for the next 5 years. Yes, Intel we can also do, Pinterest we can do, but again, it really depends on how much time we have. I'm also going to be doing like a separate market open live stream like we always usually do. But let's take a look at the growth rate here for Salesforce. So 5-year growth rate is only 10.5%. Really? That's actually really low. What do you guys think about the growth rate for the company here? All right, so we do have some guidance here from the company. Okay, so they actually non-GAAP earnings per share 468 to 469. So let's just take that 468 to 469 here for the company. So we'll just take 468. Year over year growth 24 to 24% here. Pretty much 24% is what they're guiding for. And full fiscal year 2023 guidance, they expect 20% revenue growth. That's what they have right now for year over year growth, 20%. is the year-over-year growth. So EPS, depending on the margins, expand a little bit. We might see 25, 26% year-over-year growth for the company. But again, we have to take something that's going to average out for the next 5 years, not just for the next year, because next year, sure, the growth rate can be higher, but are they going to be able to sustain these levels, 2 years from now, 3 years from now, 5 years from now? That's the real question. So some years it'll be higher, some years it'll be lower, so it needs to kind of average out at the level or the percentage that we pick. So Seeking Alpha has 10.5%. They have 16% in forward growth. Let's take a quick look at Yahoo Finance. So Yahoo Finance analysis, we've got also at 10% for the company. So 10% is what we have in growth. So I'm just going to go with 10% growth for the company. And since it's a software business, it'll probably demand some higher multiples too. So let's just go to valuation. So right now on a non-GAAP basis forward, starting at 42, 30, 39 right now on a trailing. So reasonable multiples. Definitely has seen a big sell-off here for the company. So come over to the weekly chart. Now we've obviously come from 315, 38% drop for the company, but it's also been validating this higher low and this ascending support. This sort of like a very nice uptrending channel for Salesforce since like 2004. If you really look at this company overall from a technical standpoint, it's been on a very nice consistent uptrend for a very long time. So that's why $200 definitely we're starting to see a little bit of a breakdown, and the next big support is going to be this ascending support, the higher low, if you validate that level. But yeah, so I think we'll just go with like 25 here, 25 PE. So we get a $96 fair value. Right now we're trading very high for the company based on the growth rate that it has, future growth. So yeah, we're pretty much trading at what the price can be 5 years from now. Unfortunately, that's the case. But if you do expect CRM Salesforce's revenue and EPS to grow by, let's say, 25%, then it's trading at fair value, pretty much. It's trading at fair value, and then the price target then becomes 357 for the company. It all depends on the growth and the PE multiple that the market assigns it, right? The growth is up to the company. This number is what the company delivers. This is what the market delivers. And our job is to kind of understand both from a future standpoint. So that's that. Even if you do like 15%, then the fair value comes down to 120 and the price target becomes 235. So, and then of course, P multiple needs to be adjusted. I think 25 to 20 is going to be reasonable for the stock, but we're going to keep 10% growth rate, be on the conservative side, and P multiple of 25. I don't know, I feel like they can also do like 15%, 120. I think this makes more sense for the company. Growth rate of 15%, the next 5 years, 25 PE. All right, so we're just going to plug that in, 120.18. EPS was 469, 468. 15% and 25 PE. All right, so again, we're gonna continue to kind of build on this spreadsheet with you guys. Love kind of doing some analysis, kind of figuring out some fair value as well. Caddy's been up all night. It's actually daytime for me, so it really is not an issue. I can probably do like live streams during this time, but I know you guys will be asleep at this time. That's why I don't do them. All right, guys, so I'm probably going to end it there, and we'll do like another live stream here in about a couple hours, right before, just 30 minutes, 45 minutes before the market opens. But just wanted to come on live here for a little bit and obviously go over the markets with you. We have recovered for, QQQs, for SPY, for the Dow Jones as well. SPY only down about 37 basis points, Dow Jones only down about 43. And we got the NASDAQ ETF also, still down about 80 basis points here. How are the yields? Still up over 1.5%, 1.932. Oil prices also still just kind of flirting with $100 a barrel, and Bitcoin still has a long ways to go before it starts to recover fully. So resistance 45, 46,000, and support as 37,000. So AMD we've also done. I've done complete analysis on advanced micro devices. We calculated the fair value in the stock. It's in fact is in also my video. 7 stocks that are trading at or below their fair value video. So make sure that you do check that out. AMD is part of that. Facebook is also part of that. So we use that same process to kind of calculate very quickly what the fair values are based on earnings growth and PE multiples. So again, thank you so much for joining, you guys. I really appreciate it. I know it was super early, but thanks again, and we'll be live in about a couple hours again for market open. So thank you. Please make sure that you drop a like if you enjoyed the live stream, and obviously subscribe if you're new to the channel. The links are going to be down in the description below if you want to join our Discord. So as always, happy investing, and I'll see you guys in the next live stream here in a few hours.